Good day, traders. Hope you guys are good, and welcome to this week's segment of our market breakdowns. Without wasting any time, let's start by looking at EURCHF. We're in a long-term downtrend, number one. Number two, the market is in between this range over here, right, with there being a recent retest of this weekly supply. We're looking for opportunities to catch the drop to at least this area of liquidity. Now let's go to the daily. On the daily, you can see the drop more clearly. First things first, there was an induction going into that supply region. And then we also had a failure swing. So as you can see right here, the market is clearly forming like, it was clearly forming an uptrend with this one high over here, new low, new high, and then new low, right? Now, this new low failed to create a high that would break this high, right? As a result, we had a failure swing and then a strong drop to the downside that also violated this low, right? So you can also say that we have a double top, right? And that's a signal of a change in sentiment. So as a result, what do I see? I see that we have a break of structure here and a fair value gap here. Now, I'm not necessarily looking for a full-blown retracement that will fill in this entire gap, but what I seek in this instance is for the market to at least go above this 50% region with induction. So I'm expecting a pullback and then I'm gonna sell, right? So we have a confirmed demand. We have a confirmed supply zone right here, all right? So initially we had positions over here, but I closed because we had this accumulation of orders and a break of structure, right? I tried to buy, but then it failed. But luckily, because of the sell, the drop, the profits that we made from the drop exceed the loss that we incurred from buying here. So right now, I want to sort of add on to the sell that we saw initially, right? Because it's been confirmed. We got that break of a trend line. Now I just want a pullback, right? To be able to fill in this gap, and then we can take profit at the zone right here. So that's what I'm seeing on EURCHF. Let's move on to another pair. Right. Next on our watch list, we have EURAUD, right, with a push towards the upside. And then we have this high being created. And then we also have this weak high that's waiting to be taken out. If you follow the market breakdowns, you'll know that in context, we've been expecting this movement towards the upside. And actually, we're supposed to be holding profits, or we're supposed to be holding positions, buy positions, because overall our sentiment on this pair has been bullish. We have this fair value gap right here. We also have another gap right here, right? And then the source of that drop is this one over here. So my sentiment in that regard hasn't changed, right? I still believe that the market will come all the way to this area over here, right? If we go to the lower time frames, this thing is much more clear. So you have this low that was created over here, which is the most significant low, right? And then you had this impulsive move towards the upside. Now, within this impulsive movement, you had an uptrend within the impulse, right? And that uptrend was confirmed because you had a change of character over here and a further break of structure. Now, the market formed this new low over here, right? And now, because this new low was created and this high over here failed to break the low, right? We know that this is a weak high and eventually the market has to take it out. Now, if we look at recent price action, you had this break of this flag over here. You had a flag over here, right? The market broke, retest, and now we closed off with a strong bullish candlestick. So normally I'd say wait for a break of structure above this, but I'd also say because we had this, one thing I would do is I would buy actually, right? And then place my stop loss above and below the lower time frame low, and then take profit at my next zone, right? Obviously, if you want a greater risk to reward, you need to go to the lower time frames and then refine your entry. So if you go to the lower time frames, what I'd suggest you do is I'd suggest that you wait for a break above this level over here, right? Wait for the market to take liquidity. And then after the market breaks this high, after the market breaks structure, wait for a pullback towards this potential area of demand. And then probably you'll be able to get a more refined entry for a greater risk to reward. You get what I mean? So that's what I see on Euro AUD. Let's go back to, but one thing's for sure, the uptrend is confirmed. The market has incentive to fill in those weekly gaps. And it's been confirmed that it's going up, right? For as long as the slow and the slow over here hasn't been taken out, this one is the most significant one because it is the one that has broken structure. This one is actually a weak low, but because it's in alignment with the trend, it's considered a stronger level compared to this high. So yeah, that's what I think is going to happen on Euro AUD. These are my sentiments. Let's move on to another. Right. This is an update from last week's market breakdown. We have GBPUSD. Like I said, our area of liquidity is where I expect to take profit. Now, as you can see right here, we've had a break of structure. But most importantly, the market, if you look at last week's candlestick, closed net bearish. So it's a bearish candlestick. Right, with a giant wick, with a giant wick, right? WICK. So the market has incentive to fill in this wick. Also consider the fact that we're in a long-term downtrend. So we're in an overall selling market. So if you want high probability trades in this instance, you should only be interested in selling. Now, last week, this is where I expected the market to actually reverse, but we missed that entry with a couple of pips, right? As you can see, the market did fill in the fair value gaps here, but it didn't go all the way up to this daily demand zone. I mean, daily supply, sorry, daily supply. We also have this high over here. Now, if we go to the 4 hour, then you'll see that there's possibly two scenarios that could emerge from GBPUSD. The market could react from this 4 hour weak demand, right? So I wouldn't necessarily advise you to buy from the zone, but wait for, if the market reacts from it, wait for a push towards the upside. Also for the market to take liquidity here, tap into some of the untapped orders from this candlestick over here and then drop. So it's a typical weekly cycle that I always talk about, where you have the open of the week, right? And then you have an induction phase where the market pushes towards the upside, also above the weekly open. And then you have stop hunts, right, at areas of liquidity. And then you have stop hunts and at areas of liquidity and the market targeting institutional levels. And after you got all of that, that's when you see a huge drop. And then maybe the market closing consolidation for the next coming week. So the market could open here, go up, take out this liquidity because there is incentive to take it out as it is a high, and then go into this nested demand zone, nested supply zone. I don't know why I keep on saying demand. And then after tapping into that nested supply zone, drop. So this is scenario number one. Scenario number two, you could just get a breakout from this, and the market could break this zone essentially. After breaking that zone, have a pullback, and then sell. Obviously, this will be our take profit one, but we expect the market to go even further to the downside. So yeah, this is what I see. Let's move on to other pairs. All right, next on our watch list, we have EURJPY. I just want us to look at where the fair value gaps are. We have this fair value gap. Obviously, it's been filled. And then we have another fair value gap right here. And another fair value gap right here. So I want you guys to notice where orders are partially being filled. It's literally on this level. And when the market came back, what happened? We had a reversal, right? So that's the first thing I want you guys to notice. The second thing I want you guys to notice is the fact that we're in an uptrend. I think there everyone can agree, right? So the trend is going towards this area over here. I don't think that's where the trend essentially ends. I just think that over a prolonged period, the market is targeting that level. If we look at where price is at right now, or what price is currently doing, price is actually filling in this gap over here, which it has done successfully. And then we also have the zone over here, of which I don't necessarily think that it will be successful in holding price for a prolonged period, right? I do think we should expect some form of a reaction from it, but I don't necessarily think that that's where we're gonna get a huge reversal. So that's my first take on EURJPY, right? Now on that area that we saw on the monthly, we have this nested supply, right? And I'm only going to be using that area of supply as my take profit, but I'm not going to be trading from it, right? Now, if we zoom in, that's what we see. There's still a huge gap to be filled up until we get to that supply zone. We can see that the market has been in a clear uptrend, right? And the market has recently broke this high over here. And then we've also had the market tapping into this, what you call fair value gap with this wick, and the market closed within it bullish candlestick. So it means market makers closed off net bullish, right? If you go to this time frame, which is the daily, the break of structure is shown clearly. Have a push, have a pullback, and now we've broken through structure. So now this candlestick broke the internal highs, meaning that it's time for us to buy, right? If you zoom in also here, you can see that we took liquidity here, then the market reversed from this demand zone over here. Now let's go to the 4 hour. It's pretty straightforward, right? If you go to the 4 hour, the flag is much more clear. We had a break, a change of character here, and then we had a break of structure here. Now there's no gap to be filled. So you have this push towards the upside. This is where the short-term highs or the internal highs are at, the internal low. What you're waiting for is at least one candlestick to close above this high. And that's your confirmation to buy. we're going to place your stop loss below this low, and then you take profit at the next zone, the weekly zone that I just showed you guys. And then the flag is confirmed. You know what I mean? The flag is confirmed. Everything is confirmed. This trade has been given to you on a silver platter by the banks. So do take advantage of it, but before taking advantage of it, make sure that you have the necessary confirmations at your disposal. So that's what I see on EURJPY. Let's move on to another pair. All right. Now, for the interest of time, I'm gonna end this breakdown on the dollar index. Other pairs will be shared with our paid clients. If you want to join, details are in the description box below. We have a break of the high. All right. And as you can see, the market has been bullish. And I think one other thing that's adding to this bullish pressure is the Fed cutting interest rates. Now, I don't necessarily think that the market is going to respect the zone because it's not a high probability zone. We have gone through the rules for identifying high probability zones. If you haven't watched that video, check out the Smart Money Concept playlist, preferably the first 4 videos. It will give you a clear idea of what to expect. There's a fair value gap above, right? So the market has incentive to come there. The market has incentive to come here. So if we're looking at it from a longer term on a longer term basis, price has incentive to go all the way to that level right there, right? If you zoom out, the dollar index is in an uptrend, and right now it's finishing its corrective phase. So that's what I see on the monthly, the dollar index. If we go to the weekly, especially the segment over here, we've had consecutive highs being broken. The market now formed this high over here. This higher low, sorry. Right, which tapped into this demand zone over here. Right, so we got a fair value gap. The market filled in that fair value gap, sorry. The market filled in that fair value gap and now reacting to go towards the upside. We closed net bullish with the market breaking this high over here. So this high is a weak high. Why? Because it hasn't broken any opposing structure. All right, now we're on the daily. And on the daily, you can see that we have 2 fair value gaps here. And then this is where the market is balanced. And this is where we also got more or less our reversal. All right, so it shows you that the market has incentive, or the market is trying to push high. Now, chances are prices will go a bit lower first before pushing high. If it does push lower before pushing high, then I'd like for the market to tap into this demand zone over here. Right? So that's scenario number 1. But scenario 2 is that we get a strong push straight away. And for that, we'd have to consult, again, the 4-hour. On the 4-hour, we have this over here, the zone over here. Right? So, like I said, the first scenario is us getting a reaction from this and then pushing towards the upside. Right? For the second scenario, I want to see the market violating this high and then a pullback, and I'm going to react, or I'm going to act in response to how the market behaves, right? From a significant level. But yeah, this is my sentiment on the dollar index. This is all I have for you guys this week. Please make sure that you check out the Market Inception series. There's a video dropping this Wednesday. But yeah, that's all I have for you guys. Love and peace. Enjoy the rest of your week. Ciao.